Hello everyone, welcome to Legacy IAS Academy. We will see about the monetary policy review that was released hours back and what is the policy review and what do you mean by monetary policy committee and also the functions of RBI. Here today afternoon, monetary policy review committee did not change the repo rate and it maintained at 4%. What was the reason? Everything we will know at the end of the video. First we will see what is the role of RBI, Reserve Bank of India, which was established in the year 1935. What is the role of RBI? First role of RBI is it is the banker of last resort to government. Whenever the government wants money, RBI is at the rescue. Okay, this is the first and the most important role of RBI. Next thing is financial exchange management. When India has EXIM, that is export and import of commodities and services, it is the RBI that carries out the foreign exchange management. Okay, this is one of the most important function of RBI. Next one is it is the regulator of the entire banking system in India. You have SBI, you have Canara Bank, earlier you had Syndicate Bank also, which was merged into Canara Bank, and such decisions of bank merger and bank expansion and all of the PSBs, public sector banks, are regulated by RBI. It is the regulator of entire banking sector in India. And the last thing is inflation monitoring. RBI has set, to be precise, has set for plus or minus 2% as the inflation target. That means inflation, that is CPI inflation, consumer price index, should be between 2% to 6%. This is the target set for the inflation. These are in order to monitor this inflation and to carry out the necessary monetary policy reviews. Monetary policy reviews is the basic function of RBI. When it comes to the economics, you should be familiar with two terms, that is monetary policy and fiscal policy. Okay, what is monetary policy? All the functions and the tools that were used by the RBI in order to regulate the financial system is called monetary policy. I'll repeat, monetary policy is a set of tools that a nation's central bank, in India, in case of India, it is the RBI, to promote sustainable economic growth by controlling the overall supply of money, which can be put into a single word, that is regulating the money supply and promoting growth, is called monetary policy. And this is carried out by RBI in India, and one of the basic rules of MPC, that is Monetary Policy Committee, that happened today afternoon is the inflation review and also policy rate, that we also call it as repo rate review. Okay, this is what happened today afternoon. And the next one is fiscal policy. What is fiscal policy? Fiscal policy are the policies that are undertaken by government in order to regulate the money supply. The money supply is called fiscal policy. I hope you have understood this. Monetary policy pertains to RBI and the fiscal policy pertains to the government. For example, when discussing about the budget, we also saw two different types of stands or provisions by the government. One is fiscal consolidation and the other one was fiscal stimulus. fiscal stimulus. These are the two provisions that we saw during the budget, and these are the examples of fiscal policy. And also tax incentives that are given. For example, corporate tax was cut from 25% to 22 or 23%. This was a fiscal policy measure. And also we have DBT as of now, direct benefit transfer using JAM, Jandan, Aadhaar and mobile. DBT, in which money is directly transferred to bank accounts. For example, PM Kisan Yojana, in which 6,000 rupees per annum is transferred in 3 installments directly to bank accounts. These are some of the fiscal policy measures. Okay, I hope now you will be in a better position to differentiate what is monetary policy and how RBI carries out its monetary policy, and what do you mean by fiscal policy, and budget, importance of budget in carrying out the fiscal policy. Now let's see what is Monetary Policy Committee, or we will call it as famously as MPC. This was constituted in the year 2015 when Mr. Raghuram Rajan was the governor of RBI. It was on his recommendation that MPC was set up in order to monitor inflation and decide repo rate. In simple terms, understand only this much: MPC was started in order to monitor inflation and decide the repo rate. MPC constituted under the section 45ZB, which is not important from the examination point of view. It is under the Reserve Bank of India Act. This becomes important. MPC is not under Banking Regulation Act, whereas it is constituted under the Reserve Bank of India Act of 1934. MPC was formed with the mission of fixing the benchmark policy interest rate that we have discussed here, which is also called as repo rate. RBI governor is the head of the MPC. RBI governor is the head of the MPC, and 2 members of the RBI, 2 other members of the RBI, and also 3 members who are nominated by the government as its members. This is the structure of RBI. One is the governor of RBI, 2 members from RBI, and 3 members who are nominated by the government. So totally there are 6 members, and all these 5 members have 1 vote each. All these have 1 vote each, whereas the governor of RBI, who is also the chairman of MPC, has a casting vote. Okay, I think you are understanding this. Remember, RBI governor, who is also the chairman of RBI, has the casting vote. As the chairman of MPC, RBI governor has a casting vote. MPC should meet at least 4 times a year. This is a mandate that is given by MPC. It should meet at least 4 times a year. But what is happening these days is, now we call MPC review as a bi-monthly review. Bi-monthly review. It has to meet 4 times a year, but it is meeting almost 6 times a year. 6 times a year, because of the higher volatility that we have in the economy, and because of the higher attachment or the contribution of the foreign markets in the Indian economy, we will have a bi-monthly policy. Now let's see the most important thing for the today's discussion. What was the policy review? What was the outcome and its analysis? The repo rate, which is also called as the benchmark bank rate, remained at 4%. In the decision that was taken, 5:1 was the voting pattern, which means 5 people out of 6 MPC members to retain the policy rate at 4%. One member voted on behalf of increasing the repo rate. Increasing the repo rate. It was a 5-1 decision which resulted in the retainment of 4% repo rate for the 10th consecutive time. For 10th consecutive time, which means in the last 20 months, almost 1.5 years, repo rate has not changed at all. It has remained constant. It has remained constant. What you can infer from this analysis is the impact of COVID-19 on Indian economy. Due to COVID-19, we had supply chain disruptions. You might recall in many of our videos we have discussed about the demand supply mismatch. Okay, demand supply mismatch and also the supply chain disruptions. In order to boost the Indian economy, government reduced the repo rate, and now it has been at 4% since last 20 months. Okay, and this is called as accommodative stance. It is called as accommodative stance. Reverse repo, which is opposite of the repo. Reverse repo means RBI will pay interest to banks for the money deposited by the banks with RBI. This is the function, or this is how the reverse repo works. Okay, it is opposite of repo rate. Reverse repo rate was kept unchanged at 3.35%. 3.35%. The repo rate is at 4% and reverse repo is at 3.35%. The difference between repo rate and the reverse repo rate, that is 0.45%, is called as policy corridor. Policy corridor. In this context, I want you to know this new term, that is policy corridor. RBI has projected 4.5% as CPI inflation in the financial year 2022 and 23. Okay, this is the projection for the next year. What is the analysis? What can we infer from this? And we will also see an expert opinion on the MPC review. The MPC review, which retained the repo rate at 4%, should be viewed from the lens of 2022 and 23 budget. What happened in the budget? There was a controversy or a dilemma with government in order to choose fiscal consolidation or fiscal stimulus. Fiscal consolidation or fiscal stimulus. But government went to boost growth and not fiscal consolidation. So the stance of the government was very clear, that is, fiscal policy was very clear that it wanted to boost the growth. Similarly, RBI in its monetary policy is very clear. The MPC decided in 5:1 that it is very good to retain the policy rate at 4% and not increase it. What happens if the interest rate is increased? If the interest rate is increased, then it will send negative signals and it will disincentivize the investors. It will disincentivize the investors. If there is no investment, there is no employment. If there is no employment, there is no income. If there is no income, there is no demand. If there is no demand, then there will not be an investment again. This becomes a vicious cycle. In order to come out of such a cycle, MPC has clearly decided that we will go for accommodative stance, in which the policy rate will be 4%. Government also said that the capital expenditure will be 6.5 lakh crores. Capital expenditure will be 6.5 lakh crores, which will boost the investment, and employment. Here it is clear both from fiscal policy and the monetary policy that the government is going to promote growth and will not be concerned about the debt or the fiscal deficit. I hope you are following this. As we have discussed, there was a dilemma with government in order to go for fiscal stimulus or fiscal consolidation, but government went for fiscal stimulus and also to promote growth. What's an expert opinion on this? Shishir Baijal, okay, who is a chairman and the managing director, said that at this crucial juncture, when the economy is just recovering from the instability caused by a third wave of pandemic, RBI's decision to keep the policy interest rate unchanged is a welcome move. So the industry is welcoming the MPC decision to retain the policy rate at 4%. So people are happy. We saw just after the budget, on the day of the budget, the stock markets were at highs. Stock market performed really well. Similarly, after the MPC review, the industrialists are happy in India. As usual, at the end we will see a question. Functions of the RBI with respect to inflation monitoring and growth promoter seems conflicting. Explain. Okay, 10 marker. Here you are asked to write about the dual role of RBI. That is, RBI has been tasked to maintain the inflation rate and also to take measures to promote growth. Okay, this function of the RBI is said to be conflicting, and you need to explain how is it conflicting and what should be done as a solution to this. Okay, and the recommendation, you will conclude the answer with such a recommendation. By this we will end the video. Subscribe for more such enriching content. Thank you. Have a nice day.